Everyone thinks central banks were invented by governments. They weren't. Late 1600s, London, the English crown faced a crisis. Wars had drained the treasury. Tax revenue couldn't keep pace. The king needed to borrow, but lenders had grown skeptical. The government had defaulted before. Trust was gone. No one would lend. 1694, a group of London merchants proposed a solution. Form a private company. Grant it a monopoly on trade with the East Indies, India, Southeast Asia, the spice routes. In exchange, the company would loan the crown £2 million, enormous sum. The crown accepted. The East India Company was chartered. But here's what those merchants understood, even if the crown didn't. Controlling trade routes meant controlling goods. Controlling goods meant controlling currency. The company didn't just trade, it printed its own money. It issued notes backed by future cargo. Merchants accepted them. They circulated like pounds. By 1700, the company held more financial power than Parliament realized. It didn't just finance the crown, it financed wars, it funded colonies, it set exchange rates, private traders deferred to its rates, governments negotiated with it. It was a shadow central bank, answerable to shareholders, not citizens. The company's power peaked around 1750. It commanded armies, it governed territory, it collected taxes in India. Those taxes flowed back to London as bullion and goods, which the company's notes represented. The notes became more trusted than the pound itself in some regions. A private corporation had become a monetary authority. Then came the strain: wars with France, political corruption. The company overextended. By 1770, it faced collapse. The crown had to bail it out. That bailout became the precedent. If a financial institution grew large enough, governments would rescue it. The company had accidentally invented too big to fail. By 1858, the company's charter was revoked. The British Crown took direct control of India. The East India Company's reign as a monetary authority was over, but it had revealed something permanent. Private corporations could wield power indistinguishable from states. That lesson echoed forward into the modern financial system. Central banks exist today because governments learned they couldn't outsource monetary control. But the East India Company proved something else first. You don't need a government charter to create money. You just need scale, trust, and something people want. Subscribe for more histories of how money actually shaped the world. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe, there's a new financial history every week that explains how the systems around you actually came to be. This video is for educational and informational purposes only and is not financial advice. Always do your own research.